Alright, what's up? It's been a little bit. Been trying to just take a little break from social media and all that stuff. Just stay busy. But yeah, so today I want to get into breakage structures. So um, break of structures are signs to show like whether it's gonna reverse, price is gonna reverse, or signs to show that price is gonna go the way you think it will or the way that you wanted it to. So yeah, so breakage structure essentially is pretty simple. Um, it's not too hard, but sometimes it can get confusing. But I'll show you a breakage structure here. So um, let me go to the 5 minute to really see the breakage structure. So we're in an uptrend. Um, this so as like from before videos, my previous videos, um, a liquidity sweep is where price comes and just sweeps it and leaves a wick below this low. So a liquidity sweep is like, let's see, um, where's a good liquidity sweep? Okay, so yeah, this will be a liquidity sweep here. Um, better to see on the higher time frame, but you'll see what I mean. Okay, so look, this was a liquidity sweep where it just wicks out the bottom of the low. This is most likely what will happen. Um, it usually most liquidity sweeps where there's only a wick happen on the higher time frame, so 15 minutes and up. But yeah, so as you can see here, there was a liquidity sweep right here. Swept out all this liquidity and filled all these orders, especially right here too. There was equal lows. Um, but yeah, so then that's a liquidity sweep. So a breakage structure is similar, but it's showing you where price is going to go. So right here, let's see. Perfect, right here. So you see these lows being created. This low was created, and then price kept going up. So we're in an uptrend. Obviously, we're in an uptrend. Price ended up closing, getting a full close past these lows right here. So you see these lows. Price closed past it. So instead of just a wick, it's a full body candle that closed past it. You see it, the black body candle. Um, that is showing you that, okay, price most likely wants to go down here. In most situations, price will go down. You get a close past these prominent lows, then you're like, okay, boom, I'm going to look for a trade off of that. But as you can see, this specific candle, I'll show you close up. Let me delete this. This low, and this low. These hadn't got closed past, nor did all of these lows get closed past yet. None of these got closed past. So we're like, okay, there's definitely a support level here, where that it's respecting. I don't trade support and resistance, but it's still like a support level, like it's supporting the bullish trend here because of all the rejection off of this level. But as you can see, this low is a prominent low, then all these little lows, this low, prominent low, and even this low right here. We didn't get any closes past these lows until this candle right here. Till this candle right here. It closed past these lows. You see the candle closes right there, and it's all the way down here. So that means it closed past these lows. And now that's called respecting bearish order flow. So bearish is when price is moving down. And with all the candle close stuff, I explained it in previous videos, but yeah. So that's a break of structure. I'll show more examples. Um, but so this, obviously you can tell, once it closed past it, it went up a tiny bit, retraced, and then it just dumped down all the way to this big gap, which I'm going to remove all my drawings. Dumped all the way to this big gap, but that's all off of this brick of structure. So you're like, okay, we just hit highs. Then it closed past these lows right here. So we're like, okay, we're going to look for a bearish trade. Now, on the other hand, a break of structure to the upside is a close past highs. So in this sense, let's see. Let me think. So we dumped here, and we get some pushback, and there's no highs right here, but what there is a high right here. This high is prominent high, and we got to close past it here, and look, right after that close, it immediately just pushed, and then it even closed past the New York lunch high, which is a section of the session from New York. And once it closed past that, retraced a little bit, and it just kept going up. And look at this, it just keeps going. So a break of structure is a close past the lower high depending on the trend you're in. So if you're in a bullish trend, then you want to look for a break of structure like the one I showed you at first. If you're in a bullish trend and it's just super bullish like this, there's no setups or anything, and you're either looking for reversal or you are waiting to see if you should still trade bullish or not, look for a close past these lows like this, like I just showed you and circled earlier. It price opened here, closed all the way here, and it didn't just wick out, it closed past this. So the body of the candle is below these. That's what you want to look for if you're looking for a bearish reversal or just to switch to a bearish trend. And then for a bullish, if you're bearish, if the trend's overall bearish going down, then you want to see a close past highs. So what we got here, as I marked out, is a close past a high. And so you're like, okay, this closed past the high, it probably wants to go up more. Then it closed past a prominent high that was at a certain section of a session. So that's more important. New York lunch high right here, it closed past it, which it got rejection at first, that because of this high, but it closed past it. So you're like, okay, I know that buyers want to push the market up, because they could have let it drop right here after this rejection, but they're like, nope, we want the highs. So they were pushing it, and they made it close past this high, close past this high even, and then we got a bull run after that, which it kind of consolidated here, but bull ran. And so yeah, when you're bearish, when you're bullish, you want to look for a bearish close candle past lows, and then when you're bullish, you want to see a bullish candle close past highs. So say a red candle is, say this was a, or I'll just say my pink candle. So my pink candles push up here, and then they dropped, but these candles were made from a support level that rejected these, so that it wanted to go down, and it went down to a certain level, but then it got pushed back up by buyers. So once you see a break past that level, you know that the sellers are regaining control, and they're going to send the market down to a certain level. Same with buyers. So right here, you see it push down to a certain level, which was a big gap on the higher time frame. We'll talk about that later on. But you see it pushes up, closes past this little high, closes past this little high, but then you see the prominent high get closed past, and you're like, okay, we're definitely bullish. Then you see this high get closed past, and you're like, okay, we're definitely bullish. So yeah, they're pretty simple. You just want to look for, a wick. You want to look for a wick somewhere that made a high, and then you want to see price closed past it like this. You see how it's closed? It didn't just wick out like this big thing right here. It closed past it with the body, the pink body of it, closed past this wick right here. And that's showing that that buyers are in control and they want to send the market up. So yes, that is break-up structures. Pretty short video because it's pretty simple concept. If you have questions, you can put them in the comments down below. But yeah, sorry for the break I've been taking. Still trying to figure out what I want to do about social media. I really just feel like I'm not doing enough all the time. So we'll see. But I really like making these videos. It makes me feel like I'm really doing something and being productive, and I want to help you guys too. So yep, that's the break-up structure. Any questions, ask me. I'll address them in the next video, or I'll message you, depending on if I know you or not, or if you have my TikTok or something. But yep, have a good day. Peace.